everybody. This is Toni Turner, and welcome to the market now as of Friday, November 5th, at the market's close. Well, we're still in the middle of third quarter earnings season, and U.S. equities resumed their rally today. Non-farm payrolls increased by 531 jobs last month as the surge in COVID-19 infections over the summer subsided. Good, offering more evidence that U.S. economic activity is regaining momentum early in the fourth quarter. And now let's go on to three charts that could give us a little insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, the SPY touched, where's my cursor? The SPY touched a brand new all-time high, an intraday all-time high earlier today at $470.65. Now, when I captured this chart right after the close, the SPY was trading at $468.53, just a little bit off those highs. We can see that the market's gone up for about the last 10 days in a row, and we can see also that since it rolled over just a little bit, came down and touched these October lows down here, actually October 4th, the SPY came down to $426.36. Then it rallied, moved back up, moved up over the red line, the 20-day moving average, the green line, the 50-day moving average. We did get a cross of the 20 and the 50-day, very nice, just again about 9 or 10 days ago. And the SPY has continued to move higher. And we did talk last week about this inverse head and shoulders right here, that is an inverse head and shoulders with the 50-day moving average drawing the neckline for us pretty much. So that can be a very nice bottom reversal pattern, although this is by no means what we'd call a bottom, but it's still a nice nice pattern. If it works out and price did continue to climb, and it turned out it was a good signal, and price again continued, it moved over the 50-day moving average, which is now at about 446.60, and has marched up higher. Now that is the good news. Okay, here's some news that you want to pay attention to. Right now, the 14-day RSI, which is a pretty good indicator, is at 76. Now you see this 70 line here? When the RSI gets over the 70 line, which it doesn't do very often, but when it gets over the 70 line, that means that whatever we're analyzing is overbought. In the old days, we used to say everybody owns it. So there's no one left to buy anymore. That's not quite true, but it is overbought. And also, we do want to note here that price is trading at a pretty high premium to its 20-day and its 50-day moving averages. So it has come up here, it has soared. That's a good thing. But we also need to remember that the markets of industrialized nations move in cycles. Now, this, of course, I'm doing is an uptrend. But of course, we can also see dips, slight ones like this last one we saw. So we don't want to get too euphoric as traders and say, oh, the market's going up forever. Actually, except for a couple of years where you had blips, but not much, this market's been going up for about 11 years, which is highly unusual. Doesn't usually go like that. Believe me, I know. I've been here for a long time. So at any rate, this is all good, but we don't want to get euphoric as traders because then we make decisions that aren't as good as they should be. We want to stay calm, and as we're going to talk about in a few minutes, we want to be responsive, not reactive. So we could see with the RSI overbought here and actually over the 70 line, we could see a pause here. We've been moving up for quite a while. We do have resistance now at 471. We'll call it 470 if you want. We've got support down here. Excuse me, can't draw a straight line. We have support down here at, say, 455, 457. Then, of course, we have more potential support at the 50-day moving average, again at 446, maybe the 20-day, but certainly at 446. Then we drop down to these lows that got hit in November at 426. Then we have the 200-day moving average coming in at 422. Of course, fingers crossed, we don't want to go down there to 422. So the upcoming week is going to tell us a lot about the market's strength and whether it can continue to soar. I would be tempted here, actually I am. I'm going to take some profits here, and so I have some dry powder, as they say. But please, 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 we'll see next week if the market can continue to soar, if it needs to head into a rest stop. So please stay tuned and don't assume it's going up forever. It needs to rest. It has to go a little lower many times in order to go higher. So be wise. Our next chart is a daily chart of the Invesco QQQ. As you all know, the QQQ represents the NASDAQ 100, a major index in our stock market. Now, today when I captured this chart, the QQQ was trading at $398.60. It made a new intraday high today, all-time intraday high at $400.99. So we now have resistance up here at, we'll call it 400, 401. Then we have support down here more like at 383, if I drew a straight line. We have the 50-day moving average, 20-day, 50-day from 378, say, down to 373. And of course, we have the September lows down here at 350, and the 200-day moving average is coming in at 347 and change. Like the SPY, the QQQ, its RSI is also over the 70 line, making it overbought, and its RSI is at 79, which is just a little bit more overbought than the SPY at 76. Now you can see back here the last time in June, July, you can see where the RSI moved up over briefly. It moved up over its 70 line, became overbought, did again. And it doesn't mean that the next day you're going to get a pullback, that happens, but it does mean that you need to pay attention for the next week or so. Now it dipped here just very slightly and then moved sideways for a while, but it's still, that combined with the price trading at such an extremely high premium to its 20 and 50-day moving average, I mean, if you combine it with that, that's what kind of gets me to the maybe we want to get a little more careful here. So, you know, question is too, next week, can the techs continue to shoot higher? We've had some good earnings. We'll have some more next week, and then it'll start to taper off. Can it shoot higher? And again, please remember, stocks move in cycles. They don't move straight up or straight down. So again, please trade wisely, and if you take a little bit off the table here, if you've got overbought stocks, it might not be a bad idea. Remember, you're never going to get out at the exact high price. If you do, you're very fortunate. You know, could it go up a little bit more without you? Sure. But you just have to remember you want to keep green in your account as well as on your screen. Our last chart here is certainly an opposite price pattern to the other two. This is where I'm looking to potentially go bottom fishing here. The ETF MG, Alternative Harvest ETF MJ is the symbol. This is one of the cannabis ETFs. Of course, cannabis has gotten absolutely creamed lately, those stocks, most of them, not all of them, but pretty much. But I'll show you here what I'm thinking. So it has 31 holdings. Top holdings include Aurora Cannabis, Tilray, Canopy Growth, Organigram, Kronos Group, and Philip Morris. How about that? Now, its all-time high that you can't see on this chart was at $45.39. That was back in September of 2018. Then price has pretty much moved lower since 2018. There was a little burst of energy a little earlier, but it's pretty much moved lower. And it's down now. When I looked at this chart today and captured it, it closed here at $13.87. Now, okay, so why in the world, Toni, are you bottom fishing the MJ? Well, I'm going to do it if it behaves and does what I want it to do. Otherwise, I won't. I have heard that there are some politicians now trying to push some regulations through that won't make them that will not make the regulations as stiff as they have been. And also here, what I'm looking at, if you'll notice with me quickly, when the MJ was moving down here in this pretty dramatic downtrend that it's been moving in, pretty much following the 20-day moving average all the way down, notice the volume here. Look with me at the volume. It's low here. It started to come up a little bit here in July, and price started to level off a little bit. It didn't hold, and then price started down again. Now, I'm looking at volume here. I'm watching it come up a little bit, but mainly staying low here, just as far as the eye can see the scale. Then as we come into September, we get a burst of juice here, and a burst of volume. But I can see it gaining in here in October. See right in here, see how volume is now getting higher. Price is going lower, but volume's going higher. The RSI here, you can see it just above the 50 line. It's staying level while price is going lower, which means that's actually a beneficial signal that says RSI is saying I don't think it's going much lower anyway, not right at the moment. So I'm watching this, I'm looking at this volume, then I hear more about the politicians, and I wonder if there was a good thing to make this, if this is a tradable bottom, as we call it, for a trade. So I'm looking here. If again, price is at $13.87. It's below the 20-day moving average at $14.09. It's certainly below the 50-day moving average, coming in at $14.79. So I'm looking at today's volume. It's one of the best days we've seen. Quite a few up days here in volume. So if in the next week, if the MJ can come up, and if it can come up and close above the 50-day moving average, and if it can close above $14.80, I will add a small position to my trading portfolio. My initial stop is going to be down here at $13.20 below these lows. Now, can you get in earlier? Certainly you can. I just don't feel like playing games with a 50-day here. I wanted to clear it. That would be a good sign, but certainly you can get in lower if you want. That's up to you. Now, if and when the MJ rises up above and gets up above this last consolidation line at the high 16s, I'm going to say if it gets above 17, I will add to my position. And of course, by then I'm going to be trailing my stop. I have no idea here of getting a big loss on this. I'm not going to give it much room. But anyway, again, if it rises above 17, I'll add to my position. I'm going to trail my stop. So you may want to keep an eye on the MJ in the coming week. And now you may have received my emails. Before we go on to final thoughts, please know that for just 2 more days only, we are going to offer a 25% discount for each and every one of my online training programs. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, how to trade the trend for profits. You can go bottom fishing, you can learn that. You can do 3 winning setups and so many more. Now these programs, I've made them all to help you increase your gains quickly and easily. And we don't put things on sale very often, so this really is the best time to buy. Just enter 25 product. You see right here, enter 25 product at checkout to get your discount. So you can go to this link right here, or simply click on the orange button below, and you can see all of my online training programs. Again, just for the next few days, they are on sale for 25% off. We've hardly ever done that before. Okay, so now let's go on to final thoughts. Our question is this week, when I trade, do I mirror the market's action and become reactive? Or do I wait for the market to move and then respond according to my plan? I'm sure you know what you want to answer here. As traders, we do tend to mirror the market's action. We especially tend to mirror it when the market surges dramatically higher, such as we're experiencing right now. We go, oh, the market's never going to go down. This is fantastic. It will never end. I can buy everything. It will go up. Now, we got to hold with that thinking. The way to come out on top and make money in this kind of scenario is to make sure, please, that you are planning your trade and trading your plan. I know you've heard it over and over, but it's very, very true. If you have a plan in place and the market throws you a curve, you can respond with confidence. There's that word, respond, right here, with confidence. If, on the other hand, you have no plan in place, you might make decisions that will end up creating a loss, and probably a larger loss than you would have had if you'd had a good plan in place. You know, as we talked earlier, the S&P 500 is now in an overbought position, and we could see some volatility coming up. So now is not a time when we can afford to trade using our emotions or being reactive. Instead, cherry pick your trades, plan them thoughtfully before you enter. And as I just told you about scaling into trades with that MJ trade, start by with small share size and then add to your position as it goes higher, trailing your stop and exiting when your stop is hit, or before if you want to. Know when to stand on the sidelines when you get confused and you think, I do not know what's going on. Not a problem. Just go to the sidelines. Cash is a position. This is the time to plan and respond, to be deliberate and confident, not reactive. Believe me, your trading account will thank you. And remember, for 2 more days only, we are offering a 25% discount on each and every one of my online training programs. To receive your discount, enter 25 product at checkout. And of course, product is capital letters. To see all of my programs on sale, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.